A spotlight on postcode 3084. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. It's Anzac Day today, so I just want to take a second to pause and remember those who've gone before. We will remember them. Today, I'm looking at postcode 3084, which includes Heidelberg, Eaglemont, Viewbank, and Rosanna, all of course in Victoria. It's a very interesting area, and I hope that my analysis may be useful, partly if you're interested in that postcode, but also more broadly illustrating how we complete our property analysis, such as we use in our one-to-one conversations. I just have to say I don't provide financial advice. This is basically analytics. It's based on data. I'm not a qualified financial advisor. I don't do financial advice. If you need that, go find one. That said, I do pull information from a lot of different areas, consumer surveys, lots of other sources of data as well as publicly available data. It goes into my core market model. But the critical element is those surveys. I survey households every week, and that comes in. So this is quite fresh information. I take the mortgage stress data for the postcode, the price history and trajectory, the buying and selling intentions, the migration statistics, and broader economic data like CPI, wages, and employment. So all of those things go into the model. And I create some different scenarios because there are so many uncertainties at the moment. I don't think I've ever known such an uncertain time in society and in financial markets. So I run different scenarios, but that allows me to then talk about movements in price at a postcode level, state level, Australia level. And I'm looking at 3084. So I actually broke it down into Heidelberg, Eaglemont, Viewbank, and Rosanna. Now, I put a few pictures there. A couple of reasons. One is it's quite good just to sort of highlight what's going on, but also to highlight some of the contrasts. So if you look around Heidelberg, right, there's a combination of older style, a lot of construction, quite a lot of it is multi-storey construction as well. So the proportion of houses to units is dramatically shifting. The planning regs have facilitated that. And interestingly, if you're looking at a lot of houses, you're going to be competing with construction people who are thinking, oh, I can turn this into a multi-storey thing or villas, right? And that's having sort of a bit of an impact. Obviously, if you're down the main street, it's pretty busy, and you've got quite a lot of supermarkets and what have you there. But then if you go away from that, then you've got the sort of the more green, quite a lot of development, quite a lot of maintenance and upgrade of existing properties, quite a mix of older and newer style ones as well as I flick through my photographs. Still some very green areas if you go away from those. So the first point is this is a very contrasty suburb. And what it means is you've got to be, where you look in the suburb and indeed down within those areas is quite important because there's quite a significant move around in terms of the relative value, right? And that's also true in terms of development potential. So away from those main strips, it's much harder to be able to actually convert a house to something bigger. So it does vary quite considerably. So currently in the postcode overall, there are 33 properties currently. This is for houses. There's more than about 70 overall, I think. But you can see there the distribution across the postcode. And I thought I'd just list out a few of them because it's quite interesting just seeing what the agents say. This is highlighting that mostly auctions are happening at the moment, range of values sometimes being quoted, pretty much though auction. I did speak to the agents about this and I said, look, what's the story here? Why is it that the auctions are very much the way it is? And there's a couple of reasons. One is that a lot of vendors insist on auctions because they think they get a better deal, although that may not always be true. And the other is that for some properties in some areas, there's quite a lot of demand, but the demand is really patchy. So one agent said to me, don't believe everything you hear about 100 people standing outside a property for an auction. It's just not true. Occasionally you might get that, but there are also many others where almost nobody turns up. So it's pretty patchy. So I got this sort of sense of complexity here. So it's not every property goes to auction and is hit out of the ballpark. That's not what's happening. I'd also say that the sort of the contact agent thing, which I've noticed a little bit, is also indicative of sometimes they're not quite sure what the price is. So they might show ranges of prices. And there are a few there as well. It's a bit complicated. So I guess the bottom line is this. Whatever you see in terms of these sites with regard to the indication of prices, it's pretty wobbly. Auctions, of course, tell you even less. So it's quite hard to get a really good triangulation on what's going on. What I did do then was to look at the sold properties, again houses. So 36 properties sold in the last 2 months. The map shows, again, quite a few around the main drags, but also quite a few that are in other areas as well. So again, quite a few round by the green as well. And I did include a few pieces of information about those sold. Now, when it's sold at auction, they don't cite the price. More than half of auctions, they don't report the price anyway. So there's a couple of reasons. One is the agents sometimes don't achieve the asking. In other cases, the vendor says, I don't want to be disclosed. So privacy. And even in fact, when it's sold, they don't quote the sold price. Last asking price. That isn't the sold price. It is very, very difficult to get a good read on where values currently are. There is more desperation in the market here than people are prepared to accept. Even the agents said that, right? So this is not a boiling hot market that you're looking at here. And what the mainstream media and what all the real estate portals are saying about what's going on in the market is not the full story. Now, there are some prices where they've gone over the reserve. A lot of those are when it's a property that has development potential and it's being valued as a 3-story or 4-story apartment or 2 or 3 villas on the same plot, right? And that means that it just shifts the value a bit. But it varies by suburb, as we'll come on in a second. It varies by type of property, how close it is to the main roads, how close it is to the reserves, all those sorts of things. Outlook. So one of the things I talk about are properties that are dogs versus properties that are stars. If it's orientated the right way, it's in a quiet street, if it's got a good outlook, that's going to do better than one that's closer to the main road, that's got more noise and what have you. So sheeps and goats is really important here. Right? Let's now look at price trends. When I do this, what I'm doing is I'm taking all the available sold information I can get. Right? Now, I get it from the registries. I get it from the real estate feeds where I can. And so I try to put as much information in together. And I basically have a trend over time showing the median price. Now, the median, of course, is the one in the middle. So there'll be some above, some are below, but it gives you a trend. And so Heidelberg first. So the median price in 2013 was 775,000. So if you look at 14, it went up by 7.1%. In 2015, it rose by 26%. So that was a big peak. 2016, 8%. 2017, 14%. It dropped in 2018 by 16.9%, dropped again in 2019 just slightly. There was a small rise in 2020, up 2.5%, and year to date this year, a small rise of 0.5%. Now, obviously, some have sold for higher than that, right? And that's just what happens, but that's the median. Now, after inflation, that gives you a growth between 2013 and 2021 of about 3%. So the old adage that property prices double every 7 years is not true here. The actual gain's about 5%. So the current sort of stake in the ground median price is 1.107. Now, there will be some higher, some lower, bigger plots, more houses, more bedrooms higher, but anyway, that's sort of stake in the ground. Now, if you then compare that with Eaglemont, I did the same thing. And you can see there's a somewhat similar sort of trend insofar that in 2013 it was 1.3. We're now at just over 2 million. But again, you see that in 2014 and 15 and 16, they were quite strong periods of growth. 17, not so much. Fell in 2018, down a bit. Fell in 2019, down a bit. Strong growth in 2020, up 9%, and 2.8% so far year to date. So this is an area where prices are definitely a little bit more in momentum relative to Heidelberg. It is a very different suburb, but interestingly, the average gain over the same period is actually an average about 5% again. The moves up and the moves down are a bit different. The overall end game from where we are is relatively close. If I then go to Viewbank, prices here are lower. So in 2013, about 630, now 992. Somewhat similar trends with stronger growth earlier on in the decade. 2018 it fell 6.5, 2019 down 2.7, up 7.7 and up 1.2 in the last 2 years. So 992, and that gives you an average gain of 5.8% over that decade, and about 3.8% after inflation. And then Rosanna. So Rosanna did slightly better with a 7.7% gain over the period after inflation, 5.7, from 720,000 up to 1.170. Okay, so that's sort of the trajectory. So you can get a sort of relative read of what's going on across those 4 suburbs. You know, the momentum is stronger than it was, but it's not like 15-20%, which is what one of the agents I spoke to in the area said, oh, look, we're looking at 20-25% rise this year. And I said, really? Interesting. Now, let me just then come across and tell you a little bit more about 3084. So there's around 131 listings in total across everything, all categories. 75% added in the last month. And that's quite interesting. There's quite a lot of new stuff coming on. And one of the things the agents told me was there are more people planning to list. So you can pretty be sure, I think, that there'll be more stuff coming on over the next 6 to 9 months. Combination of job keeper, job seeker, combination of property investors getting a little bit nervous, but also quite a few people are in what I call the down trader phase of life. So they bought some time before. They know they need to move somewhere smaller. They want to actually crystallize some of the capital appreciation they've got. And quite a few, and in fact across Australia there's 1.6 million down traders, and they've been looking at this over the last year or two, right? And they went through the wobble and capital values dropped a bit, and they knew they wanted to do something. So this spike in you know, quote, appreciation, unquote, is creating that extra. So the biggest force is actually these down traders. All right. And in this particular postcode, you've got quite a predominance of older households potentially looking to shift. So my read is more stuff rather than less stuff coming on stream. Now, interestingly, there's only about 40% of houses across the postcode now. The rest are units. In the other parts of the postcode, obviously it's more houses, as we've discussed. Now, interestingly, when I look at it from a rental perspective, the gross yield on houses, so I've excluded apartments now, is just 2.1%. Now, the gross yield is the relationship between the total price of purchase versus the rental that you can get if you let it out full time. And a lot of agents quote the gross rental number as being an indicative one of anything. It's meaningless, actually, because it doesn't include cost of buying the property in the first place. Net yield is the real one, so that includes the cost of the mortgage, the cost of maintenance, the cost of managing the property, etc., right? But gross yield 2.1 dropped from 2.8 last year. So that's quite interesting, and that's quite low. So that's one reason why some property investors might be looking at this thinking, well, if I can sell into a bit of a peak of price, it might be worth doing. The net yield is only 0.75%. This net yield is a cash flow view of the property. It's excluding any capital appreciation. Property investors will be looking at this thinking, oh, I can perhaps invest and get out and release some capital. And the net yield of 0.75 is quite consistent across vast swathes of Melbourne. Compare that with net yields of 3, 4, 5% up in Queensland or down in Hobart. So property investment in this area ain't flash. And if I were a property investor and I was thinking to purchase, this wouldn't be an area I'd look at, because the capital growth is not huge. We're not getting 20, 30%. That growth over the 10-year period is 5% or lower after inflation. So it's not the most attractive area for investment. So the people who are buying in this area are predominantly people wanting to live in the suburb, families often, wanting to live there as a base, for long-term hold rather than short-term investment, right? So the critical issue is the school. There's some really, really good schools in the area, and that's actually attracting a lot of families in. So that's one of the main reasons. Now, the rents for houses are falling around 12% over the quarter, so they actually dropped. Typical rent around $490 per week for a house. If you go back a couple of years, the rents were a lot higher, so 12% down in the last quarter. Vacancy rates are around 3%, so that's compared with 1.9% in May 2019. So there's more properties around at the moment. Now, that vacancy rate includes units and houses. Around 105 vacancies compared with 56 in 2019. A bit of stuff around. Asking prices, it's quite interesting. They're actually flat at the moment. So despite what all the hype is, the average asking price across the suburb is about 1.195k. The average settlement, this is quite interesting, is below the asking price. That doesn't mean that all prices are below. It means that some, though, are settling a bit below the asking price. Now, there are two things. There are some where the asking price has gone up because the vendors think that they believe the agent's story and the prices are higher, so they tend to put the asking price up but then actually settle a bit below. And the intention to sell is rising slightly, and that goes back to my down traders and a small number of property investors. Now, to bring that to life, this is the survey result for the postcode. So in 3084, there are 10,500 households roughly. There are 3,900 borrowing, 3,600 renting. There's about 3,000 properties for rent, and there are about 2,000 property investors in the postcode. So interestingly, the number of property investors relative to many other postcodes is quite low. So this is not a property investor honeypot. So overall, the financial stress metric for this postcode is 33%, which is quite low. So you don't see vast quantities of people under financial strife here. I'm seeing in other postcodes 50, 60, 70, 80, 90%. So this is a less stressed postcode. But within that, if you look at the mortgage stress statistics, so these are the 2,100 with mortgages, 56% of them are in mortgage stress. Of course, the bank's principal interest repayment holidays have come to an end. So some people are being now forced to make mortgage repayments. 56% is quite high. Anything above 40% worries me a little bit. And so there are going to be a few people with mortgages who will be looking to perhaps move on and trade out. Default rate's still 2%. That's pretty low, so it's nothing dramatic. Rental stress, so this is a cash flow now for those renting, is about 29%. That's relatively low relative to some other postcodes, and that's partly the function of prices of rents dropping. Particularly in some of those, house rents are actually still reasonably financially secure. Property investors, not a dramatic problem with property investors here. Around 13% of investors are stressed. In some other postcodes, we're seeing that at 40, 50%. So a lot of property investors who've held property for a long time have got regular tenants who've maybe been there 2 or 3 years and therefore probably are paying above the current market for rent, doing okay. Property investors, though, that are having difficulty with vacancies might well then decide to sell. So that's sort of where we are. And the combination of down traders, mortgage stress people, and some property investors explain why I think we're going to see a little bit more of a rise of property listings over the next few months. Now then, the last part of this, I just put the historical stress movements just to show that there's been a bit of volatility in stress. As mortgage stress was a bit higher earlier on, it came back a little bit and it's now rising slightly because of job seeker and job keeper ending. Now let me finally touch on the scenarios. Now this is where I try and explain what may happen, right? And there are 3 scenarios that I use. My best case, so this assumes everything in the garden is wonderful. We get the full vaccine rollout, the international borders open, we don't get any local lockdowns, etc., etc. So that's really the most positive, right? Then I've got what I call the longer term crunch. So that's when we go on seeing these little sort of spikes where the vaccine rollout still is not necessarily that well orchestrated, where we have occasional lockdowns in different parts of the country, where the international borders are still shut next year. And the second wave would be what would happen if we actually had a more major outbreak, a bit like what Europe is experiencing now. And then what I've tried to do is to give you an indication of price dynamics in those three scenarios. Now, one of the tricky things is which scenario do I think is the most likely to eventuate at the moment? Now, I'm just sitting in the best case camp, but it's come back from where I was a few weeks ago because the vaccine rollout has been a lot slower and the latest lockdown in Perth is there. But anyway, I've gone with the best case scenario for my charts on the next slides, right? But if you decide to go with the slightly less aggressive scenario, you can just recalculate the movements. You've got I should say these are aggregated movements over 3 years, right? So Heidelberg, over the next period, I'm looking at a total movement of 2021 of around 3.2, then 3.7 and 4.8%. So that gives you a total most aggressive growth over 3 years of about 11%. If I then go to the next one, Eaglemont, a bit of the same. There, if I look at Eaglemont, it's sort of 5.5, 4.3 and 3.8, so slightly stronger growth. We had, as you know, stronger growth last year and the first part of this year, so that's why that's moving up a little stronger. But that would put prices at 2.25, which would be significantly higher than previously. So that would be, an all-time record if that would happen. If I go to Viewbank, there it's sort of 3.2, 5.8 and 2.1. Again, reasonably strong, but not massively strong. And then finally, Rosanna, where 6.5, 4.1 and 4.5. So there I'm looking at 11% over 3 years as probably, so that will be the maximum upside over that period, right? Now, if the virus takes longer to control, it's not going to be as strong. So my summary of this postcode is it's very diverse. And so you need to actually look at individual properties. I did look at flooding and I looked at crime. There were no really significant indicators in terms of crime. No real major issues with regard to flooding, although there were a few quite close to some of the local streams. Didn't really come through as something that I would want to call out necessarily. So this is more about location, type of property. Pick the quieter areas rather than the more noisy areas, but you then probably have to pay a bit more. But this is not a postcode where you've got rabid 20% per annum growth, right? We're not, I think, in the early 2015, 16s again, right? Different scenario. And I think I've tried to explain some of the reasons why that is. I'd also make the point that Heidelberg's behaving a bit differently because of the massive construction boom that's going on there. There's more construction planned. Some of the other areas much quieter, much less away from the hubbub, as it were, in terms of the planning. So they tend to be more attractive. And I want to underscore again, the schools are a big story here. It is probably, of all the things that I picked up, and again, both agents confirm this, you've got families with kids looking to come to the area to take advantage of the local schools, and that's definitely putting a bit of a floor. So even in my worst case scenario, I'm not seeing massive collapse in values here, right? So if things went really bad and we had a global financial crisis, etc., this is the sort of suburb that's going to hold its value much more than many others. It's a steady, good bet suburb. I think it's actually a high-quality suburb if you avoid the main drag and some of Heidelberg, right? Some really good properties. I'd also make the point that some of the properties that are currently being listed are ones where it's important to get a structural survey because they're quite old and you can't rely on any vendor representations with regard to what might or might not be the case. So if you're looking at an older style property, and there are quite a few older style ones, it's worth getting getting an independent view because you do have sometimes some issues relating to, some of those construction related issues from being an older property. So it's really important to get your own data. There's a couple of issues. One is the development approvals down the Heidelberg main drag and just off. you're going to see many, many more multi-story developments happening over time, right? And then the other is, the new road. That's going to be a big deal, particularly if you happen to be right at atop. Well, I hope you found that useful. And if you are interested in having a one-to-one conversation about a particular suburb, you can reach for me either by my blog or directly via email, and I can send you some information. We are booking around 2 to 3 weeks ahead generally, although if there's an urgent case, we can often accommodate that depending on other situations that we're dealing with. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.